Hi, I'm Max Keiser. This is the Keiser Report. Let's talk about Tony Blair, the Pope, Muammar Gaddafi, and assorted other psychopaths. Stacy Herbert? Huh?
It's Herbert to you, Max.
Yeah.
First headline, Banksy presents new artwork to Occupy London movement. Now, of course, as with every single Banksy art, nobody knows whether it's his or not, and there's controversy already. On a Banksy forum, they're suggesting that this could be from the Keiser Report itself that created this artwork and presented it to Occupy London because, as you see in this little image, KeiserReport.com. Everybody's taking this as the Max Keiser.
Well, what's fantastic is that now that we're on 3 times a week, goes out to 250 million people around the world, everyone kind of looks over their shoulder, thinking about Keiser Report all day long. Max and Stacy, that's all anyone thinks about, because that's all really that matters in this new post-Occupy Wall Street world, post-global insurrection against banker occupation world. This is all there is. We are here. We are talking. We are now. Don't get on that plane. Stay in the lobby. Watch the show. Tell your kids to go play near the vending machines. Just watch the show.
Well, that's the clever thing about this. Everybody takes it as KeiserReport.com, but if you look at it, it says Keiser Rort. And one of the original meanings of the word Rort comes from London slang meaning fine, splendid, jolly, or boisterous. Nobody can accuse you of being too boisterous, Max.
Oh, so it's a triple entendre.
Well, I'll tell you the other 2 meanings, yes.
Yeah, I already sussed that out because of my laser-like mind.
Well, the other option is in New Zealand and in Australia, it refers to a financial impropriety, particularly relating to a government program, defrauding through the government program.
Well, defrauding the public has become the de facto modus operandi of all the G20 nations as they perpetuate their massive Ponzi scheme. Europe is going to be okay with leveraging the European financial fund thing that they've created. That just means more fiat currency fraud. Gold and silver to the moon, gold and silver to the moon.
Okay, but talking about Banksy, one of his clever pieces of art, and that was when, in response to a Sotheby's auction where his artwork was selling for £70,000 a pop, he created this piece of art called I Can't Believe You Morons Buy This. Again, we have to bleep that word out, of course, I'm sorry, but I thought this would be a great piece of artwork to be plastered across every single prospectus, every single collateralized debt obligations or mortgage-backed security that Goldman Sachs and JP Morgan tries to sell to a pension fund, is it has to say in bold images right up front, I can't believe you morons are buying this toxic waste.
Well, in postmodernist art scene, the value of art is determined exclusively by art-enabled propaganda. As the transition from representational art to abstract art, to post-abstract, to post-dadaism, to postmodernism, we only have art now that's value is determined entirely by the ebb and flow of mass hysteria as it relates to fetishism, as it pertains to something of perceived value, post-Andy Warhol's Campbell soup cans, where he turned something common, a soup can, into a fetishistic object that had to be bought at any price. Enter Banksy, who rightly calls on the Keiser Report as being completely in tune with the current zeitgeist of post-information age, where art value is determined by the collective unconscious whinging, and the central bank policies are similarly affected. Pure propaganda. Ben Bernanke says he's trying to promote inflation, but in fact, he's scared to death of deflation. It's deflation that'll put Ben Bernanke on the soup line, and we can only hope that his fate is the same as Muammar Gaddafi's.
Remember, it's either Banksy or it's Keiser Report that created that art. Let's move on to why I think we need to have I Can't Believe You Morons Buy This Toxic Waste plastered across even the foreheads maybe of any central banker or too big to fail banker. Guess who's even more leveraged than the European banks? This is on zerohedge.com and it comes from Phoenix Capital Research. And they're saying that while the world is awash in liquidity, no one seems to notice that it's actually in the form of leverage or cheap debt, not real capital or equity. So this is important to know as these G20 nations meet in the south of France this week. And The U.S. banking system as a whole is leveraged at 13 to 1, which means that an 8% drop in asset values mean they're totally wiped out. The European banking system is leveraged 26 to 1, which means that a 4% drop in asset values mean they lose all equity. But Max, guess who is leveraged the most?
The Federal Reserve Bank in Washington, D.C. What is the exact number they're leveraged?
They're at 53 to 1.
Right, so an asset value collapse of less than 2% means that the entire Federal Reserve is bankrupt. Now, here's the thing about it, Stacy Herbert, is that if we listen to the propagandists on CNBC or CNN in the United States, like Erin Burnett, for example, she had a video out there castigating some poor Occupy Wall Street protester by saying that the GM and bank bailouts are profitable. Now, that's not true because they just took the debt and put it on the Fed's balance sheet. And now when the Fed goes bankrupt, all you need is a less than 2% swing in asset values, and the entire dollar collapses into a pile of horse feathers. And she, of course, will still get her salary for telling lies and propaganda. Everyone at CNBC will still get their salary. James Cramer, who's killed more people in the equity markets than even Bernie Madoff, will still get his salary and bonus because it's all about perception, not about actual value.
Speaking of perception and not actual value, look how smart the American population is. They sense this. The Hill poll, voters say U.S. is in decline. A resounding 69% of respondents said the country is in decline, the survey found, while 57% predict today's kids won't live better lives than their parents.
Absolutely true. And sooner or later, you're going to see this reflected in the stock market. So people who are concerned about the value of their net worth should start to make negative bets on the United States economy, in particular companies that are exposed to the global descent, like I'm thinking maybe Coca-Cola, for example. Our friend Adam Curry has got an Occupy Coke campaign running on top of the campaign we had a few years ago. These are the kinds of companies that once the faith in the dollar in America collapses, that stock could go to zero. And if you're making negative bets, you've got a hedge against collapse, and at least you're preserving your own wealth.
Well, the theme of this show is I can't believe you morons buy this bleep. Now, we're saying here that only the G20 guys, only the Sarkozys and Berlusconis and Obamas and Geithners of the world meeting down there in the south of France this week buy this that they push on us. The population itself knows it's a hoax. They know it's a joke. They know there is no hope in their Ponzi scheme economy.
Yeah, that's right. The awareness is building. And on the margins, where economically speaking, all price discovery and price action begins, that's why we're seeing a fundamental change. In other words, like Barack Obama talked about change, but his was a top-down change, all talk, no action. You know, as they say in Texas, all hat, no cattle. This is a fundamental grassroots change, incremental on the margins, which of course will change the center, change the dynamic. That's why all these Occupy movements are extremely important. Every new individual that sits down and says, no, basta, I've had enough, it triggers, gets closer toward a global collapse of the dollar, which is the world's prison currency.
Well, the other important ingredient in this financial collapse is the price of oil. Not a myth, the skyrocketing cost of new oil supply. And this is from the EIA Annual Energy Review, and it shows that the capital required to add an additional barrel of oil to reserves experienced a step change starting last decade. And you see from 2003 to 2004, Max, straight up, what of course happened in 2003?
The Iraq invasion.
Iraq invasion. An invasion, a war without any intent to pay for it via taxes. That's the first war to be financed via just inflation, i.e. stealing from the population.
That's right. The Iraq war has caused rampant inflation, and we see this now in the cost of getting that barrel of oil out of the ground and processing it. The absolute price, the Brent crude price, etc., has moved, and it's quoted often, and you get the sense of where the oil market is. But what people don't understand is the cost of actually pulling a barrel of oil out of the ground. And what you're talking about here is that price has skyrocketed because all the inputs that go into getting a barrel of oil out of the ground, those prices are skyrocketing due to all the money that was flooded into the system to pay for America's genocide of 1 million Iraqis for Tony Blair's retirement fund.
Speaking of Tony Blair, I have him in this headline, Max. Tony Blair's team have set up an office in Kazakhstan, says presidential advisor. So believe it or not, anybody who calls Tony Blair in to advise them, they usually end up buried at sea or in an unmarked grave in the desert. Lo and behold, apparently Kazakh President Nursultan Nazarbayev has hired Tony Blair associates to advise him. Now, the article points out that with its vast energy supplies, the Central Asian state is increasingly confident and prepared to spend millions to promote itself. Tony Blair himself says he is not personally making a profit directly or indirectly through Tony Blair Associates or any company on this.
Well, I'd be buying puts on all the leadership in this country that Tony Blair just entered because nobody is safe now that Tony Blair is there. They're all in the crosshairs. If you're a leadership there and you value your life, you should leave immediately because Tony Blair's in the house.
And Tony Blair is in the house, the big house of the Vatican House, of course. And this brings me to Blair's buddy, Pope Benedict. Vatican calls for Central World Bank to be set up. Pontifical Council for Justice and Peace in a document called Towards Reforming the International Financial and Monetary Systems in the Context of a Global Public Authority. Yes, they're calling for a new global economic authority and a central world bank to be run by the UN, under which Tony Blair now enriches himself around the world.
I mean, to think that the Pope is coming out and saying the Vatican, oh, there should be a world bank because everything that's caused millions to die is centralization of financial authority in too big to fail institutions. So here you have the Vatican saying, let's create an even bigger too big to fail institution to create more murder, more assassinations, more war. This guy is completely inconsistent with anything that philosophically or theologically speaking that he says he represents. There's no connection.
And CNBC Max here says it should be music to the ears of Occupy Wall Street demonstrators and similar movements around the world who have protested against the economic downturn. First of all, we are not protesting against the economic downturn. We are protesting fraud, against banking fraud.
Occupy Vatican! Occupy Vatican!
It's a global insurrection against banker occupation. We're not saying who cares if the economic downturn. This is economic collapse caused by financial fraud unchecked.
Yeah, plus the Vatican Bank is one of the most corrupt banks in the world. It's as corrupt as Goldman Sachs and JP Morgan. It's as corrupt as HSBC. It's as corrupt as any big bank.
Well, I think he was concerned about Steven Schwartzman and Lloyd Blankfein getting in on this God game, trying to wrap Goldman Sachs and all these private
That's right. Lloyd Blankfein said he's doing God's work.
Yeah.
Pope's like, no, wait a minute. I got the big hat. All right, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming away, so stay right there. Hi, I'm Max Keiser. Welcome back to the Keiser Report. Time now to go to Atlanta, Georgia. Speak with Gail Twerberg. Gail is an actuary who writes at ourfiniteworld.com, and you can also follow her on Twitter at twitter.com/Gail the Actuary. Gail the Actuary, welcome to the Keiser Report.
Well, thank you.
All right, Gail, according to Wikipedia, an actuary is a, quote, business professional who deals with the financial impact of risk and uncertainty. So the question is, with risk and uncertainty in mind, tell us about your latest article on the United States as debt bubble and risk pose for the America and the whole world at this time.
Well, I think that the debt bubble contributes to GDP growth as it goes up. But then as you start reaching limits in oil supply or whatever kind of other finite resources that we run into limits in, then your debt bubble starts deflating and it acts the reverse direction. It causes GDP to decrease rather than increase.
Now, you mentioned oil there. To what extent has oil supported the debt bubble in America?
Well, I think that oil has helped us have economic growth. That was especially true prior to 1970, when it was our own oil supply that we were pumping out. And our growth rate was higher back prior to 1970. Then we started importing more oil, using oil from around the world. The oil that we got from elsewhere worked sort of, but not quite as well as the oil we had ourselves. And our growth rate slowed down after, the 1970 and 1980 period. And so we've been at a lower GDP growth rate. But the fact that we had oil in there helping us keep the growth rate up has helped us to maintain our debt growth, which has resulted in a combined high growth rate.
Right. Well, certainly the GDP has been bouncing around over the past 20 or 30 years. They had a nice pop there during the Reagan years, but oil is certainly contingent on the growth of the debt bubble, GDP. There's a relationship there. So now that America occupies Iraq, Libya, they've sent troops to Uganda. With these oil reserves secured by the American empire, will this enable this debt bubble perhaps to resume growing? And maybe is this the way the U.S. will see its way back to growth?
Well, I don't see that our military approach really has worked very well in the past. We did all kinds of military interventions in Iraq, and even now oil production in Iraq is just barely going up, and oil exports aren't going up at all because they don't have the export capacity, even if they do have increased oil production. There's no direct translation of our military efforts to higher oil production. And I suspect we'll have the same situation elsewhere.
All right, Gail, what you're describing here in terms of a debt bubble collapse is deflation, something we saw in the 1930s after the run-up of the stock market and other assets in the 1920s. You had the big pop, the big crash. Then you had a deflationary depression. And what you're describing here is a deflationary depression of debt implosion, and inability of policymakers to restart the inflationary bubble. The Reserve Bank is, however, trying to restart inflation by putting as much money into circulation as it possibly can over there at the Fed. Is the deflationary debt implosion going to continue at this pace, in your view, until we end up at a 1930s style depression worse than we are now, or will there be any intervening force to counteract that?
Well, I think we probably will head towards something that looks like a 1930s style depression. I'm not quite sure exactly how it works out, but I think what happens is the prices of goods that people use on a day-to-day basis, the food and clothing, are going to continue to rise. What's going to happen is it's going to be increasingly difficult to sell assets that normally have debt associated with their sale. And so that there is going to be deflation in home prices or just inability to sell them in commercial businesses, and even stocks and things of this sort are going to be affected more by the bubble than the prices of the everyday commodities that everyone needs.
Right. So it's a bit of a mixed bag, isn't it? Because although you have what's called cost pull inflation with energy and food at the retail level that people point to and say, oh, look, it's inflation. When you compare that against a backdrop of the housing collapse and the bond market collapse, the net effect is still deflation, isn't it?
Yeah, I think that that's the way you would describe it. But from the point of view of the ordinary person who maybe is making not a whole lot above minimum wage, I think they may see it as inflationary.
Right. Now, let's talk about China for a second, because one of the primary reason, really, why you haven't seen inflation in the U.S., despite all the money printing, is because of the offset that comes from Chinese labor force that has knocked the U.S. worker out of the box and has contributed to this massive wave of deflation. And China, of course, sucks up all the cash, and they're hoarding it more or less. They've got trillions of dollars worth of reserves. They're not recirculating it in that sense. They keep that U.S. dollar yuan peg in place. So China is really, I would say, the biggest obstacle to the U.S. being able to grow its economy again. How is that going to play out in your view, Gail, going forward?
Well, I think there's another aspect to the Chinese economy too, and that is that at least their internal growth has been propped up with a lot of debt of their own, building all kinds of apartment buildings everywhere. I was just over there in May and saw for myself how much building had gone on. But there are all kinds of government projects, and there's a lot of debt that underlies all of this. And so China needs growth to support all of its debt as well. But what's happening is that its customer base is slowing down. The price of its coal it's buying is rising. The price of oil, of course, that it buys is rising as well. So it's starting to feel some effects. So there are some definite issues with China actually being able to keep up the pattern that it's had in the past, and it may start hitting recessionary impacts as well in not too long.
Okay, well, what you're describing here is, in the past, if one country's economy is slowing down, another one might pick up, and this has gone on for many decades, and it's part of the global scenario economics for quite some time. But now, if China starts to slow down in a meaningful way, we're talking about a global depression. So post-collapse, what happens to the dollar, and does this affect the currency markets in any way, like we saw after World War II, where they came together and they created the Bretton Woods Agreement, having to reconfigure the global currency market? Do you see anything like that developing?
Yeah, I think that there's going to be some major upsets in the currency market. I think that the euro, the way, all of the activity we're seeing over there, I'm afraid what we're going to see is really a breakup of the euro, with some of the countries leaving the euro, or the euro just falling apart altogether. There's kind of a race towards the bottom. Everybody wants to have their currency the lowest so that they're better able to sell exports, but the whole situation just doesn't work. I think there's going to have to be some sort of, like you say, a reconfiguring, but I'm not sure that they'll be able to reach an agreement.
All right, now you mentioned coal there a moment ago, and I wanted to pick up on that a little bit. The history of energy usage over the years, you had whale oil, which gave way to coal, which gave way to oil, petrochemical oil. Now, is there another energy source in our future that's going to be able to pick up the slack, in your view?
I don't see that there is. I think the hope back in the 70s was that it was going to be nuclear energy, but now we've seen so many bad results from nuclear that I don't think there's really hope that that's the one that's going to really take us to the future. Maybe if we had tried thorium back 40 years ago and got all of the wrinkles worked out and used that instead of uranium, maybe that would have worked. But at this point, it's really getting too late in the game to find a new energy source and get it going.
Can you give us a 1-minute breakdown on thorium? I just was reading about this recently. We had a point going back at the dawn of the nuclear age of choosing nuclear substances. And could you just give us that 1-minute summary of that story?
Well, thorium is, in some sense, similar to uranium, but it doesn't leave you with all of the radioactive residue that's a problem after the fact. So it would be a much better source from that point of view. It also is available in much larger quantities, so it wouldn't be as much of a problem for extraction from around the world. And it also, when it's mined, it doesn't cause all of the problems that the uranium does.
Right. So I'm assuming that the lobbyists for the uranium industry had their way, and that's why we have uranium today. But let's wrap it up. We've got about a minute left. Your final thoughts on what happens when the debt bubble or peak debt meets peak oil, which is the moment we seem to be at right now. These two developed simultaneously over the past 30 years. The debt bubble grew as the oil market grew. Now that we've hit peak oil, we've also hit peak credit or peak debt. So what's the go forward from here, Gail?
I think we end up with a situation that looks a lot like limits to growth, what was forecast back in 1972 when the book was originally written, where you have a downward spiral in all areas of the economy, that it's driven by limited resources.
All right, well, that's all the time we have. Thanks so much, Gail Tverberg, for being on the Keiser Report.
Thank you.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Gail Tverberg. You can follow her at her website at Gail the Actuary. Now, if you want to follow me on Twitter, I'm at twitter.com/Max Keiser. Stacy Herbert, you can follow her too, using her name. Or you can also go to facebook.com/Keiser Report to keep up on all the updates, and we ask you for questions on our show, so we rely on you to help us. And if you want to send me an email, you can do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.